Most traders know the direction of the market, and yet they still lose money because they're entering from invalid areas. This is where understanding smart money zones makes all the difference. In this video, I will show you exactly how to identify the valid zones, draw them correctly for the best risk to reward ratio, and avoid the fake ones that trap traders out. Then I'll walk you through exactly how I use those zones for precise entries with real trade breakdowns step by step. By the end of this video, you'll know exactly how to filter out the bad zones and only trade from zones that give you high probability setups. Alright everyone, to get started, we're going to be talking about one of the first SMC zones that we have. And of the two, we're going to start off with supply zones. Now, like I said, we have two SMC zones. One is a supply zone and one is a demand zone. A supply zone can be commonly known as a sell order block or a sell zone or anything along those lines, but more commonly these days you will heard it being called a supply zone. And we're going to define what a supply zone is. I'm going to teach you how you can identify supply zones, and yeah, we'll just go through what I have laid out here. So first things first, what is a supply zone? A supply zone is a trading zone / area which can be marked up using the last up move / series of bullish candles before a big move towards the downside, usually causing a break of previous market structure towards the downside. Now, that is a lot of words and that is a lot of things to consume. So we're just going to break this up into small parts, and as I've laid it out here basically. So let's just look at this as diagram 1, right? And we're going to relate that to a part of the text here. So basically this overall text over here can be summed up with these three sort of diagrams, right? We have step 1, we have step 2, and then we have step 3. So step 1 is understanding that a supply zone is a trading zone / area which can be marked up, right, using the last up move or the last series of bullish candles before a big down move towards the downside. So what does that look like? Here we can see in this diagram, so if I mark this first part as number 1, since we're going to talk about this now, we can see that we have a series of bullish candles or a up move, right? So we have 1, 2 sort of bullish candles. You know, you can count this as a third. And overall, even if we count these candles over here, we have a series of bullish candles and an up move. And as you guys can see, this is the final up move that we have before we see this big drop towards the downside. Therefore, this combination or this series of candles and this final up move, if we go back to the definition, this last up move, right? This area is what our supply zone is, and this is how we mark it up, right? This is what we mark up as our supply zone. As we follow the definition, it says a supply zone is a trading zone / area which can be marked up using the last up move / series of bullish candles before a big move towards the downside. So again, this last up move right here, so this series of candles is the last up move before this massive down move towards the downside. So this is the markup and the zone for our supply zone. Then we move on to diagram 2, which shows us the down move, sort of the big down move. So we'll just put this as number 2, the big down move better, right? So, and we also mark up the zone using a box. So all supply zones are usually marked up using a box. So we have this gray box, which shows our supply zone, which is again the last series of bullish candles or the last up move before a massive move towards the downside. So we can now see the clear massive move towards the downside, and this can be seen using just a very obvious sort of candle which carries a lot of momentum, and usually the next couple of candles will have that, right? A supply zone must always have a large series of volume following it after we have that final up move. So that is the second part. And again, you mark up your supply zone using a box like such. The third part of this definition is about the down move, the big move towards the downside. So let's just delete everything on the screen, make everything clear. So step 3 is about break of structures, right? You've probably heard this on the channel before, but in case you haven't or you're new to SMC trading, the big move towards the downside will usually cause a previous break of market structure towards the downside. So what does that mean? That means this massive move that we had over here, right? Which is again the same thing over here in this third diagram. This massive move towards the downside is usually going to cause a break of previous market structure. So as we can see, we have a previous low over here, right? And this was a previous low in the market where, let's just say, we were trending downwards. So this was the previous low, this was the previous low. Price makes a high, and then we come down and we break this low. So what do we call this? We call this a BOS, a break of structure. And this break of structure is important because this makes our supply zone a valid supply zone, as it now follows the definition. So the 3 things that we've gone through so far: a trading zone / area which can be marked up as the last up move or series of bullish candles before a big move towards the downside. So here we can see the last up move in this movement before the big drop towards the downside is this series of candles here. We mark it up using a box, and this is the apparent big move towards the downside, right? And the last thing we mark up is that previous break of structure. So as we can see right there. So right now, for our supply zones, the things we look out for are here on the right: a up move before a big down move, and a break of previous market structure. And in this case, because we're looking at supply zones or sell order blocks or sell zones, the break of structure would be towards the downside. And that is everything you basically need to know on how to mark up a supply zone and what it is. The next step we go on to is demand zones, which is the complete opposite of what a supply zone is. So a demand zone is a trading zone / area which can be marked up using the last down move, right? Key difference here: the last down move or the last series of bearish candles before a big move towards the upside. So I'll box in the words which are different, right? Down move or series of bearish candles, usually causing a break of previous market structure towards the what? Towards the upside. So not towards the downside. So a demand zone is basically the flip opposite or the counter opposite of a supply zone. Hence why it's called a buy order block or a buying zone or anything along those lines. So again, let's look over here. We have a big impulsive move towards the upside with lots of momentum. So to go and look at what the demand zone is, again, it's a trading zone / area which is the last down move before the big up move. So where is the last down move in this diagram? It is right here. So this is where my demand zone is, right? Because we have the big up move right here. And what is the last down move before this big up move happened? It is this demand zone right here, which is the last series of bearish candles. As you guys can see, 1, 2, 3, all of these candles is the last down move / the last series of bearish candles. So step 1 done. Then we move on to step 2, which is marking up the zone using the box. So we mark up this box, and this is our demand zone, right? And we can now see this continued impulsive move towards the upside with a lot of momentum, which again is part of the definition. We need a big move towards the upside. We can see the high volume candles being displayed over here, supporting the definition of a demand zone. We have the last down move, and then we have the big move towards the upside. Then step 3, we look for a previous break of previous market structure towards the upside. And so we can see here that price left us with a previous high over here, and then we had that big impulsive move towards the upside with lots of momentum. And what happened? We broke the previous structure. So this follows our demand zone definition. Very, very, very simple. So again, if I was to make a checklist here for what a demand zone has to mean in short form, we can say it has to have a down move before a big up move, and it needs to break a previous high. So yeah, over here we can just say it needs to break a previous, so break a structure of a previous low. Here we can say break of structure for a previous high. So a break of structure towards the what? Towards the upside. And yeah, those are the definitions of a supply and demand zone. Let's now run through a couple of examples of some good and some bad supply and demand zones. So I will also be introducing some new criteria to what makes a supply or demand zone valid. First things first is this is a good example of a demand zone, right? So this right here is a demand zone. And why is it a good example of a demand zone? Because first of all, we meet the definition. There is a down move before the big up move. We can see here there is a down candle, a bearish candle before this massive move towards the upside. So that's the first part of the definition met. Break of previous market structure. We can see this previous high over here was broken by this impulsive move towards the upside. Therefore, our second criteria is met of the definition. Now we are introducing some new things. No wicks back into the zone. What do I mean by this, and why is this important? So, as you guys can see, we have a wick over here, right? We have a wick from this next candle after the demand zone is marked up. So the demand zone is over here where the gray box is. And we have the wick of this candle over here. If the wick of this candle came into the zone like that, so let me just remove all of this, and let me select a black ink, right? If this wick came and dragged down back into the zone, this would be a problem. Why is this a problem? It's a problem because it tells us that the zone has already been tapped into. And whenever we're trading supply zones or demand zones, the zone can't have any wicks into the zone, and price can't have already tapped into the zone, because we want to enter off of the first time that price comes back into this gray box. So if price has already wicked into this gray box, or there is already a return into this gray box, then we can say this demand zone is already mitigated. It has already been taken care of and price has tapped into it. So we're no longer looking to trade this zone. But as we can see here, this demand zone is all good because there are no wicks back into the zone. And yeah, it's all good in that case. So we'll tick this, tick this, tick this. And lastly, engulfing bullish candle. So what do I mean by that? The demand zone candle is usually going to be this bearish candle over here. Now the candle directly after it should be a bullish engulfing candle. So it should engulf the candle of the zone. So as you guys can see, we have this very high volume bullish candle, and this candle is a bullish engulfing candle, meaning it engulfed the previous candle. We also need to see this when it comes to marking up a good demand zone. Now we've gone through all of that for the demand zone. Let's go through a good supply zone. So as we can see, we have a supply zone here because it's the last up move before the down move. So that is the first criteria checked off. We can see a last up move before a down move. Previous break of market structure, in this case towards the downside. We can take that off. Why? Because we have this previous low and price breaks this previous low through our move towards the downside. No wicks back into the zone, right? We already established what this meant through this example, and what that means is, if I clear everything off the screen, if this candle or any of the other candles following it had wicked back into the zone, or if price had returned to the zone quite quickly, then we know that the zone is already mitigated and price has already tapped into it, so it's no longer a valid zone. This is very important, that price has no wicks back into the zone. And lastly, an engulfing bearish candle. So we can see we have this bullish candle, which is part of our demand zone, and that the candle directly after it completely engulfs all of these candles and completely engulfs this candle over here, most importantly. Very, very, very simple stuff. So these two examples are both good examples of a demand zone, and this is a good example of a supply zone. Now let's look at a bad example of a supply zone. So we have a supply zone over here. What the person here has tried to do is mark up this bullish candle over here, this sort of last up move before the down move. They've marked up this level over here, and then they've got all of this nonsense over here, right? So maybe they thought this was an impulsive movement towards the downside, a big move towards the downside. However, what is very clear is that we can see a wick coming back into this zone, right? In the form of that, we have the bullish candle, and then we have a wick like this coming back into the zone, and price actually leaves the zone, and then it makes a new candle, and then the wick of this candle is also inside of the zone. Now, this isn't even the biggest problem. The next biggest problem is that we can see there is no bearish engulfing candle, right? We can see that we have a bullish candle here, which is the supply zone candle, and the candles next to it don't even engulf this candle, and we should actually be just looking at this candle over here. This candle over here is not directly engulfing this bullish candle over here. Therefore, this is another problem. As you guys can see, I wrote it here. Again, we have the wicks coming back into the zone, which is another thing. And the last thing that is wrong with this supply zone is that we do not have a clear break of structure. The previous low, the previous structure in this market was this low over here. Price makes the supply zone, right? And it doesn't even break this level. We are yet to see a break of structure, meaning another criteria is not met for this supply zone, meaning it is an invalid supply zone, and we won't be taking any entries from here. So guys, you should now understand how to mark up a supply zone, how to mark up a demand zone, and you should have a good understanding of what valid and good demand zone looks like, what a valid and good supply zone looks like, and what a bad example of a supply zone looks like. And you could obviously replicate this into a demand zone. What we're going to do now is we're going to move on to the trading view charts. We're going to look at a couple of examples, maybe on EU and GU, and look at how we were using these supply and demand zones as trade entries. So I will see you guys in just a sec. Before we get into today's trade breakdown, I just want to quickly mention that you guys can get 32% off on all challenge accounts using code SM2 on Blue Guardian. Alright everyone, so for our first example of a supply or demand zone kind of entry, we will be beginning with a demand zone, and we're going to be analyzing on a 10-minute time frame. So first things first is let's just understand what has recently happened in terms of market structure before we talk about the demand zones and things like that. Previously, we were working with a bearish trend. However, very recently, we can see that there are signs of the bearish trend failing. We can see that price has broken one of the supporting highs of this trend and has begun to support the lows of this trend. We can see multiple times say that price fails to break lows and is creating new higher highs. So we can assume for now we are going to be trading in a bullish trend for some time. This could be a short-term bullish pattern in an overall long-term bearish trend. So for now, we will just assume that we have a sort of short time to leverage some long positions. So first things first is let us look at the most recent and the most current price action. I can see that we've made a new high over here, right? And this is our most recent higher high. And if we've made a most recent high, that will often mean we have broken a previous market structure. And I can see we broke through this previous high. And usually speaking, if there's a break of structure, then there is a demand zone somewhere for you to trade from. So let's run through if we can see the impulsive move and a demand zone. I can very clearly see an impulsive move towards the upside causing a break of structure, which we just marked up. So we have the BOS here, right? And I can actually just write in here BOS to make it very clear what we're indicating here. And I can see that we have a very impulsive move towards the upside following a series of high volume bullish candles. So how do we mark up our demand zone? Well, we look at the last couple of down move candles, the last down move before the up move, which caused this break of structure. And we can see right here, this is the last down move before the up move, which caused a break of structure towards the upside. Therefore, this zone right here is our demand zone. We can also run through the other protocol, which is that there has to be a high volume and there has to be a bullish engulfing candle after the last down move. So we have this last little down move over here of these two candles, and we straight away have a bullish engulfing candle. Therefore, we have a valid demand zone over here, and we can call this our demand zone. Perfect. Next, what do? We make sure that there are no wicks coming back into our zone. And as we can see here, this zone is completely untouched. There are no wicks coming back into the zone, and there is nothing of the sort. If there was, for example, a wick extending off of here and coming back into here, then we would disregard this demand zone and deem it invalid. But for now, there are no wicks coming back into the zone, so it's completely valid. And a way we can enter from this demand zone is simply by putting our entry at the top of the demand zone, right at the start of it, putting our stop loss at the low of the demand zone, so where the demand zone ends. And the reason we put it here is because if price goes past this point, then we can deem the trade idea as invalid. So this is a good point of invalidation for our trade, making it a good stop loss. You could potentially put it all the way down here, but I just think it's unnecessary. So let's just stick with the demand zone rule, which is to put it at the bottom of the demand zone. And for targets, for this video's sake, we will just target some of these equal highs over here. We'll just target a 1 to 2, just, you know, because the point of this video is not targets, it's understanding demand zones and supply zones. Let's play out price. We get tagged in right there. And let's play out price. Boom, TP hit. Very, very, very simple. Again, not a lot of hard analysis went into this. It was very simple. We understood the trend. We applied, we saw a break of structure. We applied the demand zone definition and the rules, and we came out with a successful trade of a 2 risk to reward trade, meaning we got 2% on our account. It's as simple as that, guys. And just imagine the power of this strategy if we coupled it up with more complex topics. So, for example, liquidity sweeps, timings, session trading, inducement, fair value gap, all of these other things, high time frame confirmations. If we coupled all of those things up with this demand and supply zone, then you'll soon start to see in the rest of the videos that I will upload from now on my YouTube channel how powerful this strategy can become. But before we get into that, let's actually go on to a example of a supply zone entry and what it should look like and how to analyze it and everything to do with that, like we just did with this demand zone. So I'll see you guys in just a sec. Alright everyone, back on USD CAD. We are now on the 5-minute time frame and we will be going through a supply zone example. Again, we're just going to start off with a bit of background analysis here and let's just see what's going on. So you're probably surprised, it's a very clear uptrend, yet we're going for a supply zone entry. The reason I'm saying that is because not only have we seen a recent break of structure towards the downside here, maybe perhaps indicating that we're going to see a reversal in the trend, we also have multiple levels of demand down here, which we can actually think of price coming down towards. So this is another way you can utilize supply and demand zones. It can give you clues and ideas of where price is going to head towards the next. Therefore giving you multiple means of entries and analysis and a better understanding of the overall market. So we have demand zone here, we have demand zone here, maybe one here and here, right? So we have a couple of reasons to go down. Whether it's for the short term or whether it's for the long term is a different story. But for now, at least up until this point here, we have a reason to be going short. So first things first is understand that we have a break of structure over here. So I'm just going to write in break of structure, BOS. Right? And it's good to get into the habit of that. So whenever you come back to your analysis, you know what this line is about. And so yeah, we have this break of structure here. Next thing we do is whenever we think there's a break of structure, there will usually be a supply zone that is along with this sort of break of structure. So we can see right here that we have a very, very, very clear supply zone. Why is a very clear supply zone? Because it is the last up move before this massive down move towards the downside, which caused a break of structure of a previous low. So we have this previous low over here, price breaks this low, and the move that created that break of structure was this down move over here. What's the last up move before that massive down move? It is this candle over here. So therefore, this is our supply zone. I will now write this in here. Supply zone. Perfect. And let's double check our other criteria. Do we have a bullish engulfing from the direct candle after the supply zone? So we have the last up move. The candle right next to it is engulfing, sorry, a bearish engulfing. So yeah, we have a clear bearish engulfing candle right over here, signifying that this is a valid supply zone. We also can see that this wick comes nowhere near the supply zone, and it is a very open and a price is yet to tap into this supply zone. Therefore, it's unmitigated and it is a still valid supply zone. If, for example, this wick or this wick or this wick came back into the zone, or price, closed already in the zone, then we know that the supply zone was already tapped into. Therefore, we won't be trading it again. However, it is unmitigated, a bearish engulfing, break of structure towards downside, and impulsive move towards the downside. Everything is therefore valid. What do? We take our entry from there. We put our stop loss at the point of invalidation, which is at the top of the supply zone, and let's just target a 1 to 2 risk to reward. Price tags us in and tags us out very, very easily catching a 1 to 2. Just for the sake of this, I'm not actually sure if this plays out or not, but we did say that the price might come towards that demand zone. So let's see if it actually comes towards that level. Yes, it does. And let's see if it bounces off of this level. Okay, interestingly enough, it doesn't bounce towards this level, which actually is a good indication that we might even be coming all the way down towards this demand zone. Potentially, you could have caught a 1 to 15 here, or more reasonably, you could have caught a 1 to 5, right? And so, yeah, that shows the power of the supply and demand zones. In the next coming videos, I will continue this series of the A to Z basics of the SMC trading strategies. Next video we will be going over more sort of how to couple up the supply and demand zones with different concepts, and we will go into some of those concepts such as market structure, liquidity sweeps, and things of that nature. So if you guys did enjoy this video and found it beneficial, make sure to leave a like and let me know in the comments. Let me know some suggestions of other videos you would like to see in this series when it comes to the full A to Z guide of trading smart money concepts. And yeah, make sure to check out the mentorship if you want to learn my full methodology, the full smart money concept strategies, the new ALQ strategy, which is a completely different ball game, as we are no longer using just simple SMC, but we are using something much more tested and much more complex, and a thoroughly back tested strategy. So make sure to check that out. But yeah, thank you all very much for watching, and I will see you in the next one.